Good morning, everyone. This is 7 a.m. in the morning, and I came to make this video because I've made mistakes on it too. So I want to share with people so they can understand. Even when the fair value gap, let me zoom in. Even when the fair value gap can be a strong mode of entry, sometimes it might not be, because of most of us don't wait for confirmations. We just feel like the price should enter the fair value gap and boom. And sometimes some fair value gap are very wide. When you tend to just use it in full, you might end up having a wide stop loss. And we forget to always know that no matter how many trades that are even perfect entries can still hit your SL. So why don't you just use better risk management so you don't get your account blown? So I want us to dive into this. This is an FVG that worked perfectly, and I did this because I want to show you the difference between the one that works perfectly and the one that doesn't work perfectly. So let us zoom in. So what happened here? This is a break of structure. This is a break of structure. After you saw this, then you saw the FVG here. Most FVG tend to work when the first touch comes is very strong, then the second touch comes is strong too, but not strong like the first touch. But that's why you have to enter them with confirmations to know that price wants to move. But trust me, FVG is a very good spot of entry. It's a very good spot of entry. When they tell you that buyers are interested at this point, trust me, FVG is one of those points where buyers are most likely interested, because most times I tell people that, okay, if you want to spot an FVG, in my own sense, I would say an FVG comes after a break of structure. So before you mark an FVG, you must always know that you must have a break of structure. You don't mark FVG just like that. So what do we see here? This is a break of structure, as you can see on my chart. Then after that, I marked the FVG that led to the break of structure. You can see. So the FVG is the imbalance, because as you saw other candles here, other candles were just rallying up and down, but that imbalance, that gap, which is here, you see this gap from this point to this point, is the FVG. So that's where you mark as an FVG. But make sure that you observe that after a break of structure. How do you know a break of structure? When price comes to the downside, rallies to the downside, and breaks the candles which led to that downward move. Like you can see now, price rallied to the downside. Price rallied to the downside. And what can we see next? Price came up to break this move that led to the downside. So I want to just clear that, because some of us might be new to this and some might not be new, but we should just have to refresh our memory on things like this so nobody gets left out. So let's move in. So wait for price. Price have moved, as you can see from this point. Price moved very far. From this point, price moved very far. Let's calculate this piece is over 100 and something. Let us check. It is over 140 pips. Yeah. So wait for price to retrace back together FVG. Okay. So price retrace back. And for me, I like marking my FVG like when I mark the FVG. See this line here, this dotted lines that are passing across. Let me show you this. See this dotted line, this half. That's why I put as my entry. So because why I do that is because I want my SL to be cut. I don't want a big SL, because I know that for every entry you have to have a proper risk management. That's one thing we all need to know. We have to have a proper risk management. Why am I saying this? Because most people just tend to just put their entry from this point, from this beginning point to this end point, and they get scared of putting it downward a bit, which is in normal sense, which is meant to be. But because they have seen that, okay, let's check how many pip that is. This is about, okay, just 7 is okay, but depend on your lot size anyway. So, but I prefer putting it halfway so I can leave more gap. If I want to take this trade like 15, okay, let's put it here halfway, and I want to put it here so it can be below this point. That's below the demand zone. You see, you can see it's just 21 pips depending on my lot size. If I'm putting it from here, about 25 pips. So you see how many pips you save me, but it's going to make me sure that yes, the FVG have been properly tapped, that well mitigated. But if I'm saying, okay, I should wait for, sometimes I might miss the trade, but I'm fine by it, because sometimes it might just tap in there, not reaching half of that limit, and then you think the price is going or is going up, and you just come back to eat your SL. So it's better for you to play safe than just want to enter or jump in every trade. So let's move forward. That's not why we're here. So we looked deep into this and we saw that, okay, price have mitigated this fair value gap. Price have tapped into it. Let me use that term too. Okay, so what do we look for? We look for a confirmation candle. Why am I saying this? Most fair value gap fail because we people, we lack patience. We just want price to tap into a fair value gap because we feel like it's an high point of interest and we expect it to just buy up that way. But no, it doesn't happen that way most times. Though it happens at some circumstance, but we don't have to give it that risk because we are retail traders. We don't have much like the banks. Even the banks that have much to spend, they don't risk trade like that. They even think deeper than us because they trade trillions, they trade billions of dollars in the financial market, and they can't afford to lose that. So let's look at this. Let's look closely. We see that let's do for a confirmation. I recommend you use either a bullish engulfing or an hammer as a confirmation entry. And how do you spot that? You check, is there any candle that engulf it and after it hits this zone? We look closely. We haven't seen any candle because some candles might look like an hammer, but it's not. So you have to be careful about when you choose your hammer. You have to be very careful. Like this one right here. The wick above is already almost 2 times the body of the candle. Let's check it closely. Sorry. You see the wick above here? It's just 1. Okay, let's check this one here. 0.3. So the wick is already bigger than the body. So we can't just, because of impatience, we just say, okay, price is going to leave me. You wait. Price, even if you leave you, there are still many other trades you can take. But you want to be sure. Okay, so what happened after that? We watch because we are looking for confirmations now. We have seen our entry. So what do I do now? I watch again, and I've seen a hammer here which even tapped into the zone. What do I do? If I want to just buy along the trend, I can go to a lower time frame and still look for a mode of entry, so I don't enter the market late. But if I want to just buy with the trend, because I know that, okay, once the hammer has been signaled and the next candle is bullish, I just want to buy from the breakout and ride to the next zone or to the supply zone that can cause a rejection, which is here. Let me mark this out, which is here. So what are we seeing here? It has happened. The hammer, as you can see, this one, if I say I should measure the upper wick here, you will notice that it's nothing compared to this body. That's why we can call it an hammer. How do we consider a hammer? The previous candle before it must be a bearish candle, then you have the bullish candle, then the other candle engulfs it. Most of us know all these strategies, but lack of patience make us, few of us or more of us, not to respect our strategies and not to respect the textbook rules that we already know. So what do I do here? I wait for price. I already have my SL here. I'm just waiting for confirmation. So no matter where I am, is that SL that I have pictured out already, I've drafted out already, I'm going to put here. Even if it comes back to hit my SL, I'm still working with that SL. So okay, we said our SL was about 22, if I'm not mistaken. So this breakout here, if I put my entry, our market will be 22. Okay, it's 22 here, right? Okay, it's 22 already. So I'm just making rough estimate here. So then I wait for the breakout, which was here. That's after the breakout that I set my buy stop. So after that, our market breaks out and takes me in. So it rises to the TP, which is this point. Which is this point. So as you can see, I'm just making it simplify for everybody. Let's get to the next so we don't waste much time. Let's get to the next. So the next one I'm going to show you, I want to show you why those candles tend to fail. Okay, this one worked. Okay, let's get to this place so we don't waste much time. You have seen the breakout structure here. You have marked out your FVG. What do we want to do? We want price to come back to this FVG and go up back. So you might be wondering, other ones have been working for me, then I go to this one, I lost more money, I'm pained, I'm upset, I'm pissed. But you don't know that you should have understood that you can't just, there's no perfect zone for entry. You can always see a point of interest, which you have to know on your own that yes, this place is where buyers are interested. This place is where sellers are interested. But you don't have to just put 100% because the market maker tend to provide fake out. So you can make mistakes before the real moves occur. So what do you have to do now? Let's go into this. It entered my the half. What happened? I didn't see any confirmation candle. So I'm waiting patiently for a confirmation candle. I didn't see. And what happened? Price closed below the FVG. So it's just as simple as that. Wait for a confirmation. Sometimes you might see a confirmation and it might still go to SA. It's fine. Just know that you respected your strategy. You respected the textbook patterns, the candlestick patterns, and it still happened. That is normal. But you have more confidence because it will save you more money than jumping on every trade. It will definitely save you more money. And most times, trust me, the trade is going to go your direction once you see a right confirmation. If you narrow it down, you see that there are no candlesticks here that wants to give you any mode of entry that you say, okay, yes, I want to buy. Because the market is not ready to go up. It was bearish. It was totally bearish. Let's go down. Let's go down. It was totally bearish. You can't even find anyone. But it already closed below your FVG. So you don't have to even stress yourself. Just look for another point of entry. Don't stress yourself at all. It will save you from, if you are saying, okay, you have made about let me say like you made 70 pips over there from the last one we checked that functioned well, and you came here, you checked, this is just 7, and this is the FVG. Maybe you just want to keep it below this spot, so at least you can allow your trade to breathe. This is like 26 pips. So imagine making 70 there and losing 20 here because of it. You don't want to wait. You want to just be making it, let the money be coming. Trading is not all about making excessive cash. It's about consistency. Not that you just make 1 million today and you lose 1.2 million tomorrow. You'll be depressed. You'll just feel like, it's a scam. I'm so upset. I'm angry about this whole thing. So you have to be calm and know that, okay, trading is not all about rush. It's not all about I want to make it big at a time. You have to know that, okay, patience and consistency have to compound into success. So I know that with this video that I've made, I've been able to pass more knowledge out to beginners and to people like we intermediates that are not yet there as pros. So with this, I know that, okay, gradually all of us are going to get there. This year is our year to make something big. Trust me, we have to just push harder. We need a slight push. We need to sit down, rethink, and talk to ourselves that, yes, this is what I'm pursuing after. This is what I want. This is what I need. Then if you know this is what you need, you have to sit down and put in the work. You can't just say this is what you need and you are still gambling in the market. You make money today, you lose it tomorrow. I'm not saying you don't have to lose money, but in trading, you don't have to lose more than you made. That's just the true fact. When you start becoming profitable, you don't have to lose more than what you made, because that's why they make an order for risk management. There is no how you are making 2 out of your risk and you tell me that, okay, you lost more than your deposit. If you are following your strategy and you know your strategy works, you have back tested properly and you know it works, definitely if you are trading 5 trades, even if you lose those 5, trust me, if you trade before you trade 10 trades, you have made back those 5 trade money. Imagine losing 20 pips, multiply 20 pips times 3, that is 60 pips, and you just won one trade, and maybe that one trade that you won is like 70 pips. You have extra 10 pips. You know that you made profit. So let's just end the video here. I thank you all for watching, and I hope that as we impart this in our daily trading life and we stick to our rules, we become profitable in no time. Thank you everyone, and God bless you. Thanks for watching.